I'm Greg Hunter. Welcome to USAWatchdog.com. A guest that we haven't had on a long time. Only had him on one time before. He's a lawyer by trade, but doesn't practice law. But he did come up with theeconomiccollapseblog.com. His name is Michael Snyder, and he is back with us today. Michael Snyder, thank you for joining us today on USA Watchdog.
Oh, Greg, it's great to be back with you.
You are constantly laying out the case for how the economy really hasn't been, hasn't really recovered, even though despite all the noise and the hoopla and we're constantly telling us we're in recovery with 0% interest rates. And just something that hit me yesterday, Apple's earnings. Apple's, was up a 2.5% or so on, millions of iPhone sales. And, everybody on the financial news networks are, whoo-hoo, wow, we're in this recovery. And number one, I say to myself, we're not in a recovery. Number two, don't they realize that a lot of these iPhones are manufactured overseas? China should be happy.
Yeah, it's great for workers in China, especially over the past decade. We have shipped millions upon millions of good-paying manufacturing jobs over to China, and we built China's economy. In fact, right now on a purchasing power basis, China actually has a larger economy on a purchasing power basis than the United States does, which would have been unthinkable 20 years ago. People would have said it would have never happened. But we have built up China's economy. We're building up China's middle class. And instead of Apple is making plenty of money, they could support American workers. They could support jobs over here, but they're not doing it. And so all this success is in a lot of ways is building up China's economy.
Well, what I'm constantly, and I've been saying this since I've been on USA Watchdog in 2009, is that there's no recovery. There's a market recovery. The stock market came back, but there's no recovery for Main Street. And you laid out your one of your more recent posts that you came out with 12 charts that shows that there's serious damage, permanent damage in the economy. I don't have the title exactly right, but you had just chart after chart after chart, and of course you are trained as an attorney, and I always get the feeling you're laying out a case, and might I say you lay out a pretty good case. And so let's just start with employment. This is one of the charts you led with, and if you look at employment here, it just takes a cliff dive and then bottom bounces here and never comes back. Talk about this.
Yeah, I want people to look at that chart very carefully because it paints a very different picture than what we're hearing in the mainstream media. What this chart shows is the percentage of the working age population that is actually employed, that actually has a job. And as you can see, back in the year 2000, we entered that decade, we were sitting at about 64.5%. Then it started to go down a little bit, up and down a little bit. But then prior to the last recession, prior to the last financial crash, it was sitting at about 63%. And then it declined dramatically as millions of people lost their jobs, and it fell to below 59%. And it stayed there from the end of 2009 all the way up until just recently in a very narrow band between 58 and 59%. And just recently it ticked up and finally ticked back up to 59%, but it's still vastly below where we used to be. But they're calling this an employment recovery. But if you see that tiny little bump at the end there, that's an insult really to all of our intelligences to call that an employment recovery. The truth is that the percentage of people that actually have a job is still about at the same level it was back just about during the depths of the last recession.
And John Williams basically says the same thing, is that we really haven't grown at shadowstats.com. He says the jobs are a farce. Also, the amount of jobs they're counting are part-time jobs. 7 million Americans you brought out that would like to have full-time work but don't. In one of your pieces, they're part-time people, and of course no benefits with that, especially if they're under 30 hours, right?
Oh, absolutely, Greg. Almost all the jobs that have quote unquote that are being created each month, the vast majority of them are part-time jobs, which can't support a family, can't support a middle-class lifestyle. In fact, the jobs that have been quote unquote created during this recovery, which is barely keeping up with population growth, those jobs pay an average of 23% less than the jobs that were lost during the last recession. So don't mind all those jobs that were lost. They're being replaced by these lower paying jobs. As a result, our incomes are going down. Median household income is down about 8% per year from where it used to be. And as a result, the household wealth of average Americans is down. While the wealthy, they're doing fairly well in the stock market for the moment, but you look at the average American household, according to the New York Times, the average middle class household, the average American household is worth 36% less than a decade ago. That means on average, we've gotten 36% poorer as middle-class Americans. And so these are very disturbing trends, and these are trends that have continued even in the midst of this so-called economic recovery.
And Obamacare is not going to help any of that out. I mean, the big lie, other than you can keep your doctor and your health plan, is that it's going to be cheaper. For some, it's cheaper, but for most, it is not.
Oh, without a doubt. And I'm going to share something with you, Greg, that I've not even shared with my readers yet. But personally, this has hit home with me. Because as a self-employed individual, I have to go out and get my own health insurance. And our health insurance premiums, I recently got the news, they just about doubled only because of Obamacare. And that's just us personally. I know that others, it's tripled, in some cases, even higher than that. So yeah, the price of it, even though our incomes are going down, or at best staying the same for many people, the price of everything is going up. It's not just healthcare, it's food inflation. The other day, my wife, she went to the grocery store, and just for 4 pieces of chicken to get us some dinner, for 4 pieces of chicken, it was just a shade under $10. It's crazy. The price of food, the price of everything is going up constantly. Meanwhile, our paychecks aren't. This is putting a tremendous amount of stress on the middle class.
Well, let me hit your food inflation chart here really quick here. Food inflation, which they don't count in the 2% or whatever number they quote. You can just see it going up, 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 up. It's just, just going up. And that backs up what you're saying. I want to get back to labor real quick. We got the food inflation in. Labor participation rate, just a quick, another, adding, insult to injury. I mean, it is just, tanking, it's just going down. Down, 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 down. You can see it right here.
What this shows, Greg, is that the percentage of Americans that are either working or looking for work is at a 36-year low. And this is how they've gotten the, quote, official unemployment rate to go down. It's not that more people are working. We've already talked about that. The percentage of people that are working is pretty much the same as it was during the depths of the recession. How they've gotten the unemployment rate to go down is they've created this fiction that millions upon millions upon millions of people don't want to work anymore. So they're counted as leaving the labor force. They don't count as part of the labor force anymore. Therefore, unemployment goes down. It's a mirage. It's a fiction. They say, oh, look, the unemployment rate has gone down so much. It's only because they've taken millions upon millions of people that are out of work, and they say, well, they don't count as part of the labor force anymore. Therefore, our numbers look pretty, and our politicians can give fancy speeches.
92.6 million, I believe, is the, 3 decades, more than 3 decades low. Would you say 36 years? Okay, so if the, people aren't employed and they're not making as much, I guess then this next chart about single-family housing would come as no surprise. You can see it right here. Plunging, crushing. I mean, it is bottom bouncing right in here. It is a fraction of what it was. Maybe a quarter, a third of what it was at the peak. Right here at the very peak at the top here. I mean, if people are they don't have jobs, good paying jobs, they can't qualify for loans, no matter how cheap the interest rate is, right?
Yeah, our housing industry has absolutely crashed. You see that it's nowhere near that it was during the peak times. Well, people say, well, that was a boom. Well, if you look back even further to the beginning of the chart, to about the year 2000, we're still that tremendously below the level where we were back in the year 2000, even though our population has gotten much larger since then. As you can see, there's that huge crash in the housing market. And then since then, we've gone up, down a little bit here and there, but it's up at a permanently lower level. And one of the things I've attempted to portray through these charts is that we've had permanent damage to the U.S. economy. So it's kind of like if you go to the beach and you build a sandcastle, and then the waves start coming in, the tide starts coming in, and a wave hits the sandcastle, and another wave. Well, the sandcastle is not going to be completely destroyed by the first wave, but then more waves will come in and eventually be totally wiped out. That's kind of what's happening to the U.S. economy. We've had these waves of economic problems, and we've had permanent damage as a result. Now, our economy is not totally destroyed yet, but we've had permanent damage. And now new waves are on the way, which will cause even more damage because of the long-term trends, which we can continue to talk about. But the long-term problems that are plaguing our economy, none of them have been fixed. Instead, the Federal Reserve printed a bunch of money, pumped up the stock market, made people feel good. But the underlying economic fundamentals, they're not getting any better.
Speaking of Fed printing money, I just want to start telling people, hey, listen, folks, this is a federal deficit. We have no intention of paying it back. Let's get real here. We don't have any intention of ever paying this back. Here's the federal debt on a chart. This is, again, part of your piece, which I love this. It's just boom, boom, boom. If you can't understand the words, you can understand the pictures of how the federal debt is. We're almost at $18 trillion, and it's going right on up to the stratosphere. And the real indebtedness, according to people like Lawrence Kotlikoff at Boston University, plus 200 trillion is what we're on the hook for. 200 trillion. That's not some fantasy now. It's just, here are the taxes coming in. Here's what we've committed to, and we're on the hook for 200 trillion. We're never paying that off. What do you think about this federal debt, and when does it blow up?
Yeah, this is a massive problem. But in the mainstream media, they're saying, oh, the deficit's going down. We've got it under control. That's actually not true. It's all accounting tricks. It's just smoke and mirrors. Actually, if you look at fiscal year 2014, which just ended, you go back to the beginning of fiscal year 2014 to the end of fiscal year 2014, the national debt increased by more than $1 trillion. They say, oh, but the deficit was only $400-something billion. But that's because they take all these things and they say, oh, well, that doesn't count as part of the deficit. That doesn't count. That doesn't count. But really, our expenditures are in terms of what, if you look at the difference between what we're spending and what we're bringing in, it's more than $1 trillion. And under Barack Obama, under his 8 years, we're on pace to more than
6 years. 6 years.
But by the time 8 years is over, we're on pace to approximately double the size of the national debt, from 10.6 trillion when he came in. So when he leaves, we're on pace for it to be over $20 trillion, which is absolutely insanity. What we're doing to our children and our grandchildren is absolutely criminal, because we're essentially stealing from them, going into debt, and we expect them to pay the interest, them to repay these debts as time goes along.
Aren't we doing that to ourselves? Could this isn't going to be a kids and grandkids problem. I've been telling people in my site that, the kids and grandkids, that's 80s and 90s talk. Aren't we going to suffer the consequences for this? I don't know when. The question is when, but aren't we going to suffer the consequences? And if so, what's your time window?
Oh, we're absolutely going to suffer the consequences for so much of this. And the time window, I believe, Greg, that the next 12 to 15 months are going to be the most interesting time period that we've gone through economically and as a nation that we've ever seen since I started writing, since I started my websites.
How long have you been on?
I've started the Economic Collapse blog at the end of 2009, so that gives you some idea. And it's not just that we're going into another $1 trillion of debt every year as the federal government, but the federal government, in addition to an additional $1 trillion of dollars they have to borrow to fund federal spending, they have to roll over, or in essence, they have to pay off by borrowing new money, more than $7 trillion a year, in addition to one more trillion on top of that. So what the federal government actually has to borrow about $8 trillion a year to fund current spending plus repay old debt with new debt.
Right now, $8 trillion a year they got to roll over in fiscal 15, which just started. That's what you're saying.
more than $1 trillion they have to borrow from the rest of the world, from wherever they can. And so far, the rest of the world has played along by lending us trillions upon trillions of dollars at super low interest rates. We keep borrowing, we keep paying it off at these super low interest rates so we can kind of keep the game going. But if that changes, and all it's going to take is some kind of major event, some kind of major financial crash, a stock market problem, all it's going to take is some kind of black swan event, and then we're going to have a massive problem on our hands because we're going to have to borrow $8 trillion, and we'll be in a situation where people don't want to lend us money, especially at super low interest rates.
Won't they just print the money at that point? That's what John Williams at shadowstats.com and other people think, which is what kind of they just announced. We thought the stock market took this 1,000-point swoon, and the Fed came out and said, "Oh, hey, we're the rumor of QE4, and they're going to keep interest rates at zero, and they're going to keep printing money and accommodating, blah blah blah. They're going to keep printing money, and that's why the stock market had that. People thought it was over, and then the Fed came out and said, "Oh, not over yet." I mean, what about all the money printing?
Yeah, the money printing, there's always a temptation. We've seen it throughout history of governments to print money. And at first, it works at first. And that's why there's such a temptation to do it, because at first, it seems to help. But just like the Weimar Republic, it always ends badly. And that's the same thing that's going to happen here. But I differ with some analysts to a degree in that I don't expect us to see tremendous hyperinflation immediately when the next wave of the crisis comes. I believe first we're going to experience a brief period of deflation as we see the next major stock market crash come.
You mean like stocks going down, housing prices going down, severe deflation? I mean, people are going to get hammered in terms of their value of their assets, bonds, stocks, housing. That's actually a physical asset, but there's a big bunch of debt to it. Is that what you're talking about? Explain that.
Yeah. Well, like what we saw in 2008, when there is a financial crisis, all of a sudden banks don't want to lend to each other. They don't want to lend to anyone else. Credit freezes up. And our whole economic system is based on debt. It's based on credit. It's based on the flow of money from the banks, lending it to the rest of us. And it's a credit card debt, loan debt. People need debt to buy cars. People need debt to buy homes, mortgages. So the flow of credit is absolutely essential. When there's a financial crisis that freezes up, all of a sudden money's not flowing. All of a sudden it's like someone sucked money out of the economy, and there's a period of deflation. I believe that we will have a brief period of deflation before the ultimate response by the Federal Reserve, the federal government. Ultimately, in the long run, I agree with so many others and other guests you've had where we're going to have tremendous inflation driving the price of gold and silver through the roof. But I believe in the immediate aftermath of the coming financial crash, we're going to experience a brief period of pretty significant deflation.
Like brief, just define brief.
It could be months, it could be a couple of years, depending on the response by the Federal Reserve. But it's going to be a credit crunch. It's going to seem like no one has any money. It's going to seem like no one has any money for their business. It's going to seem like no one can get money from the banks. And we need to watch the banks.
So because I'm going to interrupt you right here. We need to watch the banks. I'm going to let you finish that. So you should have some cash, actually foldable paper money, not just gold and silver and everything else. You're saying that maybe you should have some cash. Am I reading that right? And I'll get back to the bank thing about watching the banks. Go ahead.
That's exactly correct. A lot of people talk about preparing for what's coming, but they leave out that people are going to need a cash reserve. People are going to need an emergency fund to pay your bills, to pay your mortgage. You can't count on necessarily using your credit card or going to the bank and getting a loan, an emergency loan, or what you're going to need to get you through the months or longer of this coming crisis. So people need to have some kind of a cash reserve, some kind of an emergency fund. I'm a big believer in that.
Folding money, I mean in hand, cash, not checks, cash.
Yeah, well, I'm a believer in not having all of your eggs in one basket, but yeah, people should have some cash that isn't even necessarily in the banks, some cash at home which they can access during an emergency.
Okay, back to your point that I wasn't being rude. I just want to get that in about you gotta watch the banks. You gotta watch the banks. Your point.
Yeah, the too big to fail banks, they're such a key to the coming crisis. Back during the last crisis, 2008, in the aftermath, we were told by our politicians that they were going to fix this. They were going to fix the problem of too big to fail. They were never going to let this happen again. Instead, it's gotten even worse. The too big to fail banks, I'm talking about banks like Goldman Sachs, Morgan Stanley, JP Morgan Chase, Bank of America, those banks collectively have gotten 37% larger since the last crisis. So the problem of too big to fail is now bigger than ever. And now 5 of the 6 too big to fail banks, 5 of them, each one of them has exposure to derivatives in excess of 40 trillion with a T, $40 trillion. So instead of learning their lessons, cutting back on their risk, behaving rationally, these big banks have gone absolutely crazy, gotten wilder than ever, more reckless than ever. They've turned Wall Street into the biggest casino in the history of the planet, and they are so far out on a limb, it's hard to put into words. And so I believe during this next financial crisis, we could see multiple too big to fail banks collapse and fall like Lehman Brothers at the same time. And when you're talking about trillions of dollars that these banks are exposed to, tens of trillions, there's not going to be enough money in the entire world to fix this problem.
You're talking about Mad Max here. You're talking about the people who be trading in bacon beans and shotgun shells.
Yeah, well, I'm talking about the total breakdown of our financial system, because these too big to fail banks, they account for more than 40% of all loans in the entire country. So, and if they collapse, the rest of the players, the rest of the smaller banks, they'll be scared to lend to people too. So you're talking at the very heart of our economic system. It's kind of, and a lot of people are saying, yeah, let the banks fail. I hate the banks. Well, it's kind of like a patient with a very advanced stage of cancer. That's what our economy is like. We're so tied into these banks. If you try to kill the cancer when a patient has a very advanced stage of cancer, you're probably going to kill the patient as well. It's kind of like our economy. If you try to kill the banks, well, our economy is going to die as well. So people need to watch these banks. When the next great financial crash happens, stocks start crashing, bonds start going crazy, watch these banks, because when the banks start getting into massive trouble, that's when all chaos is going to start breaking out.
And final question for you. You have the Economics Collapse blog. You're getting more than 1 million page views. I'd say that's pretty dang successful for a guy that started this in 2009 with no real media experience. It's about when I started mine. You have 500,000-600,000 visitors a month. And my question is, does your family believe you, or do they think you're walking around your house with a tinfoil hat?
There's varying degrees of belief. There are some who believe what I'm saying, and there are some relatives that we have that don't believe what we're saying. They're not getting prepared. They're going on vacations. They're buying the fancy toys, the fancy cars, all kinds of things, and they say, "Oh, everything's going to be fine." So, and it can be frustrating, but I'm sure that's the experience of so many of your listeners out there. But all we can do is sound the warning, and it's not doom and gloom. The people that are going to have doom and gloom are the ones that are going to get blindsided by what's coming. All their hope and future is in their material possessions, in their 401k, in their stock market portfolios. And when they're wiped out, they're going to give into utter despair because they're going to realize they haven't prepared, they haven't gotten ready, they didn't understand what was coming, and now they're going to lose their house, they've lost their job, they're wiped out, everything that they were living for is gone. I believe that by understanding what's happening, by getting prepared mentally, emotionally, physically, and spiritually, I believe that gives people hope for the future, because a great storm is coming, and anyone with half a brain should be able to see it. It's obvious, as so many of your other guests have described what's coming. The evidence is there. It's just most people believe what they want to believe, and a lot of people are willingly blind to what is coming.
It's not a matter of if we're going to have another financial calamity crash, call it what you will. It's a matter of when. We're just talking about the timing. Is that right, what you're saying?
Absolutely. It's just a matter of time. And so many of the same patterns that came before the bursting of the dot-com bubble, the bursting of the bubble in 2008, so many of those exact same things are happening right now. I write about them on my website, theeconomiccollapseblog.com. So many of the exact same things are happening, yet people still don't see it, even though it's happened just a couple of times in our recent history. It's just a matter of time, and I'm telling people, watch from now to the end of 2015. Life is about to change.
With that, Michael Snyder of the economiccollapseblog.com, we are going to call it an interview. Thanks for coming on. Thanks for your great work. You lay out a case with point and chart and link and story. I mean, that's what I love about your work. So thanks for coming on, and I hope you come back.
Oh, absolutely. Anytime, Greg. I love your work. Thank you for having me on.